Welcome back to the Daily Crypto Roundup, the show where we break through the noise and decode what's really driving the digital asset markets. It's Tuesday, October 28th, 2025, and the market feels like a coiled spring. Bitcoin is holding near $115,000, but under the surface, something's shifting. Big players are making bold bets. Old institutions are bending, and the lines between politics, money, and power have never been thinner. From Tokyo boardrooms to Washington backchannels, from the mining farms of Asia to the social media empires of America, everyone's moving fast, and not everyone's playing fair. This is the day the noise got loud again. Before we dive in, take a moment to follow the show and leave a 5-star rating. It helps new listeners find us, keeps us independent, and lets us dig into what really matters. All right, let's get into the markets. Bitcoin sits near $115,000, edging up just under 1% in the past day. It remains the market's compass, a calm surface hiding restless depth. Ethereum trades around $4,120, steady despite cautious derivatives data. Institutional demand continues to come from tokenized asset projects rather than speculative flows. Solana has regained momentum, trading close to $200 even. The network has processed record daily volume this month, underscoring its claim as crypto's fastest chain. BNB, still buoyed by Binance's recent billion-dollar token burn, holds firm at roughly $1,136. XRP remains one of the week's best performers at $2.63. As speculation over an exchange-traded fund listing continues, Cardano trades around 66 cents, consolidating quietly while developers roll out new governance tools. Dogecoin stays at near 20 cents. Still the people's coin, still tracking Bitcoin's rhythm. Avalanche is holding about $20, benefiting from renewed DeFi attention as tokenized treasury projects expand. Chainlink sits near $18.50, backed by rising adoption of its cross-chain protocol. And Stellar Lumens rounds out the list at roughly 33 cents, with stablecoin activity pushing daily transactions to new highs. Altogether, the market's total capitalization stands just under $3.9 trillion, with Bitcoin dominance close to 57%. It's not euphoric, it's balanced. And that's often when the next big move brews. Bitcoin's calm at $115,000 is deceptive. Underneath, open interest on major futures exchanges is climbing again, while volatility remains compressed. Analysts call this configuration a loaded spring. Funding rates have turned mildly positive, showing traders leaning long into the upcoming Fed meeting. On-chain data reveals long-term holders trimming small portions of their stacks, a classic sign of profit-taking while retail traders increase leverage. Market makers describe this as tension disguised as stability. Either Bitcoin breaks above 116,000 to start a new leg upward, or another fast shakeout clears excessive leverage. Institutional inflows remain a stabilizing force. Both BlackRock and Fidelity saw ETF inflows yesterday, signaling steady conviction despite short-term noise. Support near 112,000 has held throughout October. If that line survives another week, the market structure strengthens for a year-end push toward 120,000. Now to the next big story of the day. Tokyo-based Metaplanet has taken corporate Bitcoin adoption to a new level. The company announced a $500 million Bitcoin-backed stock buyback and credit facility. Instead of raising traditional debt, it's leveraging its own crypto treasury, essentially turning Bitcoin into operational collateral. Shares jumped more than 8% on the Tokyo Stock Exchange within hours. Japanese analysts call it a bold experiment in balance sheet engineering. Transparent, programmable, and publicly verifiable on-chain. It's not just about price appreciation, it's about financial sovereignty. By locking Bitcoin into a corporate reserve model, Metaplanet is demonstrating that digital assets can underpin real-world financing without intermediaries. Expect other Asian corporates to study this blueprint closely. When Bitcoin collateral becomes routine in credit markets, adoption moves from ideology to infrastructure. While traders obsess over charts, miners quietly shape Bitcoin's foundation. Today, Canaan Incorporated unveiled its newest flagship miner, the Avalon A16XP. It pushes 300 terahash per second at 12.8 joules per terahash, roughly a 20% jump in energy efficiency over the current Antminer S21. Pre-orders opened immediately, and major operations from Texas, Iceland, and Kazakhstan are already lining up. Mining is survival of the efficient. Each improvement like this stretches profit margins, extends machine life, and fortifies the network's decentralization. As hash rate climbs toward new highs, Canaan's advance marks another leap toward industrial-grade resilience, the quiet arms race that keeps Bitcoin secure. As we mentioned at the start of the podcast, the market still bites. Over the past 24 hours, roughly $217 million in leveraged positions were wiped out, according to the Economic Times. 2/3 of that carnage came from long positions on Bitcoin and Ethereum. No flash crash, no hack, just leverage fatigue. Funding turned against aggressive longs, and liquidation engines did the rest. Open interest fell by nearly 6% overnight, flushing out excess risk. Historically, these resets clear the runway for healthier rallies. The lesson never changes. Volatility is not destruction, it's discipline. Each purge transfers coins from gamblers back to holders, tightening supply for the next uptrend. In one of the more unexpected crossovers of the year, Truth Social, Donald Trump's media platform, announced plans to launch a blockchain-based prediction market division. According to filings reported by Barron's, the platform will let users create and trade event contracts on everything from elections to sports results, mirroring platforms like Polymarket and Kalshi, but branded with Trump-era populism. The project will reportedly use a proprietary token for settlement and operate under a newly formed fintech subsidiary. Political analysts see it as both a business expansion and a campaign season experiment in engagement economics, a way to gamify politics through crypto speculation. Critics warn it blurs lines between political fundraising, entertainment, and financial risk. Supporters call it innovation in free speech finance. Either way, it cements the Trump ecosystem as an active player in Web3. A separate investigation by Reuters claims the Trump family earned roughly $800 million from crypto-related ventures in the first half of 2025 alone. The report outlines income from token licensing deals, NFT royalties, and equity stakes in blockchain startups tied to entertainment, media, and tokenized real estate projects. While none of these ventures are illegal, the sheer scale of profits highlights how politics and crypto now overlap in the open. Trump-branded projects attract speculative capital. That speculation fuels new projects, and the cycle feeds itself. It's the convergence of celebrity, influence, and decentralized finance, a phenomenon that could define this decade's intersection between money and media. But here's what no one's really saying out loud. What's happening with Trump and crypto isn't just about one family or one company. It's about something much bigger. It's about what happens when influence itself becomes currency. For decades, money shaped politics. It decided campaigns, built empires, and bought silence. But now, the tables are turning. Politics is starting to shape money. And in the process, it's rewriting who gets to control the story. The same networks that once depended on lobbyists and donors are being replaced by wallets and tokens, digital tribes built around loyalty and belief. You no longer need a super PAC to fund a movement. You just need a viral idea and a blockchain. That's the new economy of power. Attention converted directly into liquidity. Every influencer, every politician, every media empire is beginning to understand it. Attention isn't just influence anymore, it's collateral. When Trump launches prediction markets, he isn't just building a product. He's building a mechanism that turns emotion into speculation. Every rally, every statement, every controversy becomes a tradable moment. It's the financialization of belief itself. And that's where the line between finance and faith starts to blur. Because when politics moves on-chain, the system stops being about truth. It becomes about traction. Whoever controls the narrative controls the market. This is the new frontier of crypto. Not just digital gold or decentralized finance, but decentralized influence. It's messy, it's powerful, and it's happening in real time. Whether you love him or hate him, Trump's experiments are showing every leader on Earth what's possible when you mix celebrity with code. It's the blueprint for a new era, where policy debates become tradable, where rumors become markets, and where the economy of trust gets rewritten in tokens. And that's the part worth paying attention to. Because the next wave of disruption won't come from traders or miners. It'll come from people who understand that power no longer lives in parliaments or stock exchanges. It lives in data, in narrative, and in code. That's not a conspiracy. That's the natural evolution of a world where everything valuable eventually becomes digital. And whether we like it or not, that process is already unstoppable. Before we wrap the markets, a quick reminder. In a world shifting from paper to code, control is everything. That's why this show is brought to you by Ledger, the world's most trusted hardware wallet. If you want real ownership, not exchange promises, protect your crypto offline today. Link in the description. Secure your wealth before the next reset begins. The takeaway. Today's market is not euphoric or broken. It's recalibrating. Bitcoin holds strong near 115,000. Institutions keep buying. Corporates like Metaplanet are turning crypto into credit. Miners are rewriting the physics of efficiency, and politics continues to intertwine with the blockchain. The message behind all 6 stories is clear. Crypto is no longer a separate world. It's merging into everything: corporate finance, technology, governance, and even electoral theater. This is the new normal. A world where volatility is permanent, innovation is relentless, and ownership is digital. Follow the show, leave a 5-star rating, and tell me what you think of today's stories. Drop your thoughts in the comments, and as always, we will see you at the top.